And now with the latest business and market news, over to Jayne Edwards.
Thanks, Alan. Wall Street closed out October with little change on Friday. Blue chips edged up slightly, while tech stocks went nowhere. Investors spent most of the week on the sidelines, waiting for Tuesday's Federal Reserve meeting and the outcome of next week's midterm elections. There's expectation the Fed will announce the size and pace of quantitative easing, with speculation it will include at least $100 billion of bond purchases per month. US GDP figures released on Friday underlined the need for action. The economy grew by 2% in the third quarter with a lift in consumer spending, but it's not enough to bring down the stubbornly high unemployment rate. It was a fairly bleak week for global markets. The US and Australia were flat, while the others headed into the red. Now, with local news, here's Marcus Padley.
Well, we've been treading water this week ahead of the momentous FOMC announcement on quantitative easing next week. This week was stuffed full of AGMs and third-quarter production numbers. We also saw a CPI number which was below expectations, which left the chances of the RBA raising interest rates on Melbourne Cup Day at 50-50, where previously it was a dead cert. But the big story of the week was the Singapore Stock Exchange bidding for the ASX. And that $8.4 billion bid at $48 saw the ASX share price briefly come close to $44 after the announcement, but it fell ever after as it became clear that they're going to run into political, if not regulatory, problems. But a big bid like that, following on so closely from a bid for Perpetual, at least a private equity approach, left brokers producing research, including long lists of all the companies that are going to get taken over next. And that list even extended to, can you believe, a private equity approach for Telstra. The other big story this week was the banks' results from the ANZ and the NAB, which were up 47% and 63% at the headline. That made banks a talking point everywhere, from talkback radio to the Senate, where there's going to be an inquiry into banking regulation, something the banks and their shareholders vehemently reject. If only they'd run the companies badly, everything would have been all right. Macquarie also had results this week after 3 profit warnings this year. There was fears of another one, but the results were okay. They reconfirmed earnings guidance. The environment seems to be a little bit better for them, and the share price went up. Stocks not doing so well this week included Commonwealth Bank after a rather cautious AGM. They talked about a challenging operating environment. We also saw BlueScope Steel down after the largest steel producer in the world joined the third largest steel producer in suggesting earnings this year are going to be below expectations. And Asciano had a rather cautious AGM, which called into question the QR National prospectus forecasts, enough for QR National to say no, our prospectus forecasts are okay. Winner of the week this week was Copper Explorer QDeco, up 14% after some more encouraging drill results and quarterly production numbers. And loser of the week was Karoon Gas. After a 91% rally since June, it was down 14% as they launched their Brazilian IPO.